Hey, hello, and happy 2026, everyone. Coach Chris coming at you with my latest video. I've been doing a lot of research and development on automated trading strategies for implementation on futures prop firms, and spent a lot of time in 2025 developing different strategies, researching them, testing them, and finally have come up with a really stable, very refined strategy, I guess you'd call it. And one of the things that I've discovered quickly in 2025 is that the built-in backtesting functionality of automated trading, I'll call them bots, whatever you want to call them, strategies in TradingView Parlay. The built-in backtesting was not that accurate. It's quick to calculate and shows results, but they're somewhat skewed sometimes when you excuse me, I got a little cold. When you put them into practice, the way that the back testing enters and exits trades is not always how it's executed in real time. By that I mean, when you're trading, it matters when in this candle you enter the trade, whether it's at the close, whether it's immediately when the signal fires. There's different entry criteria, and as you know, depending on when that fires, will have a big impact on your P&L for that trade. And you can instruct the strategy to enter at different times, but it still isn't always accurate. And so what you actually have to do is test this in real time using either demo accounts, prop evals, etc. And so I'm going through the forward testing on this now, and so far the results are mimicking what I've developed here in my strategy. Now, a TradingView strategy is much different than just an indicator. All an indicator does is it plots different values on the chart. With a strategy, you are adding the element of actually entering and managing trades based on a certain condition. Now, many strategies will also plot different things on your chart like an indicator would, but it's a little different animal, and the Pinescript language, the programming language, is a little bit different. And so what the other thing that happens is you have to have an intermediary between TradingView and actually entering the trades into a brokerage or prop account. In other words, you can't just log into your trading account here using the trading panel and have TradingView execute these trades in your brokerage account. You have to have an intermediary using something called a webhook or JavaScript language that will send the entry and exit criteria to your prop firm or brokerage. It sounds more complicated than it is, and it can be if you're not familiar with programming and why things do the way they do in computerese. So that's another layer of complication that gets added. But once you get it implemented, it's pretty straightforward. So let me just show you some results. Now, I wasn't going to trade yesterday. Today is the 3rd. It's Saturday, the 3rd of January, 2026. Yesterday was the 2nd of January, the first trading day of the year after the markets were closed on the 1st, obviously, for New Year's. Now, let me just give you a little backstory. The week had been kind of a strange week because you have Christmas with light volume, and then you have the week of New Year's. There wasn't a lot of news happening. There was a lot of political news, but not too much economic news. And I was a little reluctant to even trade yesterday. I wasn't going to trade, in fact, because normally the day after New Year's, a lot of people are taking off. There's light volume. There's not the greatest price action. But immediately after the open, we got slapped in the face with some just amazing price action. And so I did decide to trade, and I did decide to trade the bot. And so I'm going to show you just how this worked on the first day, and then I'll give you updates as this forward testing goes. So this is I was trading the micro Nasdaq March expiration, the MNQH contract, and I was trading micros. Now on this chart, you'll see that the background in this area starting at 7:30 and going up until 3:15. These are Central Daylight Times. It has a green background, and that's due to the fact that the auto trading bot has a time filter on it. One of the things I quickly realized when I was doing my research is that certain trading strategies behave much differently. You can't just flick this thing on 24 hours a day and get good results. And this is over time, you realize, when you look at the overnight session, you can see that there's, very little candle-to-candle movement typically. And so with this particular trading strategy, you need some momentum, hopefully back and forth, but at least some in one direction at certain periods, like you get after the New York Open. And so what I have instructed right now is to turn it on at 7:30. Now, if there would have been a news event, I would have waited till 7:45, simply because the news event, that the major brokerage and market maker algorithms can react kind of crazily to news announcements. And so I don't like to have the Autobot on, because I think it skews the results during those time periods. So yesterday I started at 7:30. Now, there could be an argument that, and this is part of my forward testing, start to turn it on around 6 or 6:30 if we're starting to see, some good pre-market volatility. But for the sake of this test, yesterday I turned it on at 7:30, and then it went, like I said, it went till 3:15 Central Time, and that's why there's a green background. I have a little info box up here just to give me some feedback throughout the day on different levels, and I'm not going to get into that today. But you can see here with where the red down arrows, I had it set to take only short trades yesterday. And I have noticed over the last 30 days, and you'll see the results here, is that the results to the downside, we have seen more extended moves when we do make a move to the short side. Not to say that longs aren't making money, but you can see here, look at this short, how extended it was. And here there's a long, but see how it truncates? And here, so when the pullbacks or the long impulses come, and they're also very often cluttered like this, where with the shorts, they're very often very impulsive and nice and clean. Look at that one. Look at that one. Here's another one later in the day. And so I did have this set to only shorts. And like I said, I'm going to show you the results. So there was 1, 2, 3, 4, 5, 6, 7, 8, 9 trades taken yesterday. Now, the way that TradingView works, as I said, it has a built-in analyzer backtesting tool. And so what you can do here is you can set a range of where you want to backtest. And where I always start, I started yesterday with a custom date range. Thursday, the first market was closed. Yesterday was Friday, and so I just set it for today's date, even though there's no trading. So basically, this started at 5 p.m. Thursday evening and ran all day of yesterday till the market closed. Now, when I talk about times, I'm talking about Central Daylight Time. Now, remember, I'm only trading the bot under this test starting at 7:30, so 1 hour before market close, and these were the results. My total P&L, and that's the overall, once you subtract the losses, and this is trading 2 micro contracts, which you know is a very small size. So $4 per point moved. We had a total P&L of $506. Excuse me, this darn cold is, with a maximum equity drawdown of $186. 9 total trades. Now you can see it's only 55% profitable, 5 of 9. But look at this profit factor, 4.5. If you know what the profit factor is, that means for every dollar you put in or risk, this is what you can expect to return. 4.5, that's huge. Now, if you go down here, you can see the metrics. I had a gross profit of $650, 144 in losses. But here's the beauty of it. By keeping your winning trades larger than your losing trades is the key, where you can be, everybody talks about, well, what's your percent? Oh, geez, I run at 85% profitability. Now, that's when they call that 85%, they're talking about winning trades. So in other words, he wins 85% of his trades. But what is your risk to reward factor? Most trader, it can be very deceiving, because if you have, if the 15% losses are such that they're way more than your winners, you're gonna still have a net losing P&L. So P&L is really the only thing that matters. So here we have an average P&L of $56. Okay. The average winning trade is 130, and my average losing trade is 36. Okay. My largest winning trade was $373. My largest losing trade was only 51. And this is with 2 micros, remember, $4 per point. So I mean, this thing is really crazy. In a second, I'm going to show you some longer term details. But I mean, for a day where I didn't intend to even trade, I mean, this is crazy. I mean, I'm going to do something here, and it's just to show you the power of this thing. Shoot, I don't know if it's going to let me. No, it's not going to let me. But let's just say you traded the NQ, the full contract. You'd be looking at 5 times. So you'd have had a $2,500 day with what is that? About $1,000 drawdown. No. It's even more, because it's 5 times. It'd be 2,500. Yeah, and about 1,000. But let's go here. So let's just look at the last 7 days. That's December 27th through January 3rd. It made $904. Okay, with that same equity drawdown of only 186. And you can see here, I actually was more. It took 30 trades. So it's averaging, what is that, 5 trading day, about, 5 to 6 trades a day is what it averages. 63%. And you'll see the profit factor does go down a little bit, and that will over time. It's just due to the larger sample size. So over the 5 days, there was a loss of $340, which is minuscule. Most people lose that in a day. Oh, I want to go to the monthly here. Let me just go one more time, just to show you that it's not just a flash in the pan. 904, and then so let's just look at the last 30 days. And there it is. This is with 2 contracts. Okay, 130 trades divided by 30. So what is that? 4 to 5 a day. beautiful, and actually my profit factor is going up. I mean, my number of profitable trades, the profit factor does decrease, but even so, and so, um, let me just do something. Let me just go to five. Let me just go to the settings. Where is my number contract quantity? Let's just go to 5 and update the report. So look at 10,000, almost 10 grand, trading half of a mini, you know. Everyone likes it when you put up big sexy P&Ls in there, and they start dreaming away. But the fact of the matter is, um, it, it for testing especially, the size of the P&L really doesn't matter, um, from a testing standpoint. So this would have been one day with 5 micros, $1,200, 465. If you trade minis, you could just double those figures, would get you there. Well, I guess what I'm trying to say is, really, for me, when I'm testing these strategies, what I'm looking at mainly is these two numbers based on the number of contracts. And by keeping it at 1 or 2, let me just change these settings back to 2. Right here. Go back to 2. Update report. So by keeping this at 2, what I'm looking for here is, if it's in terms of prop firm tradability, that they have very strict drawdown rules. And so what you're looking for is consistent profitability with a low drawdown. That's what I was trying to achieve here. Now, as the account size gets bigger and you get more profit in the account, you can obviously increase the number of contracts you're trading in order to achieve the bigger numbers we all want to achieve. So you can scale these, but it has to be profitable at the lowest level in order to scale up, if you follow what I'm saying. So in other words, if it's unprofitable trading 2 contracts and your drawdown is huge or it's equal to your P&L, by scaling up, it doesn't improve things. It actually works against you. Whereas when you have these variables in the correct ratio, as you scale up, it doesn't negatively affect you or cause you to blow accounts. You can actually scale this properly. Now, the other thing I wanted to achieve is, let's say you're a new trader and you're starting out with the smallest accounts, 25Ks, 50Ks. You have to be able to reach profitability with very low there's restrictions on the number of contracts you can trade, on your drawdown, on your consistency, and all of that. So the scaling can't always come immediately by trading huge size in these. So what you do, instead of trading huge size, you make up for it with number of accounts. So like with Apex, just as an example, it doesn't matter, it can be any firm. Okay, 500 doesn't look that sexy in terms of a P&L for the day. Oh, geez, I make that in one trade, all these influencer. And that's fine. However, if you take that and, instead of saying, okay, I'm going to make 2,500 per trade in one account, all you do is increase the number of accounts in copy trade, and this easily can scale. So you can see, that if let's just say 5 accounts, because most firms now will accept at least 5 accounts. I mean, you're looking at, just with these minimal results, very little risk, you're looking at $2,500 days. That's 50 grand a month if you trade every day. So, and this is all 100% automated for me. I do monitor it. Because just, at least now, But there are events that can happen throughout the day, technological events that can happen throughout the day that could really screw things up. Like, your internet goes out, say, or it disconnects, different things can happen. And so, but I don't intervene once the algorithm fires, it manages the account in every way, shape, and form. And then you can see the trades here. There's losers. I mean, of course there's losers. This was the 9 trades it took, but through your uh, trade management and risk, you can see you never let your losers get out of hand. Okay, and you can see here, but the winners, you know, $373. You'll never see a loser anywhere near that level, 139. So in these 2 trades, I well wiped out any losses, but the other smaller wins here will keep these in check. Like here, we had a $20 loss. Boom, there's one there. Here's a $30 loss, then a $38 gain. Couple of losers, and then that one kind of offsets it, and then you've got the 2 home run trades. So it's looking very promising. I'm gonna back test this not back, forward test it. I've done a lot of this. This is the result of about 2 years worth of work getting to this point. So it's not like I haven't been putting a lot of time into this, but it's very, very hard to develop a strategy that works day in, day out, and produces consistent results in the ratio of that profit factor and the profit versus the drawdown. I mean, there's so many trading strategies out there. I also wanted a strategy that traded 3 to 5 times a day, simply to get to enough profitability, yet that helps to iron off, because you are going to get losers. There is no trading strategy that I'm aware of that is profitable long term that is 100%. I just don't know how it can exist. There's too many unknowns throughout the day that can happen, and there's just none that I'm aware of. And so if you can get something, that's consistently profitable, has good risk management controls, that's what I was looking for, and I think I've achieved. So once again, Happy New Year, everyone. Thanks for hanging in there. It turned out to be a little longer video than I had thought, but good luck trading to everyone. I'd be interested to hear your comments, concerns, questions, and hopefully I'll talk to you soon.